Okay, we're going to continue on with our statement of retained earnings. Now, this is a little tricky. It takes time to get an appreciation and an understanding of how this statement works. This business is in its first year of operation. Therefore, the beginning balance of retained earnings, let's say at January 1, 2010, is 0. So the statement of retained earnings needs to show what happened to retained earnings from beginning of year until end of year, from January 1, 2010 until December 31, 2010. And again, keeping in mind that since this is the first year of operation for the business, the January 1 retained earnings balance is 0. So our second statement, I'm going to put it right here in this small area of this flip pad. Again, we need to show the same information at the top. Company name, High Power Corp. This is the statement of retained earnings. Now again, I'm using a few abbreviations in these statement titles. Normally you would not use abbreviations in financial statements. Financial statements are our finished product, and so we want it to look nice and be very presentable. So no abbreviations. And again, just as for the income statement, the date of the statement of owner's equity, which for a corporation is the statement of retained earnings, the date is for a period of time. And it's always going to be for the exact same period of the income statement. So our date is going to be for the year ended December 31, 2010. So we're going to start out at the top by showing retained earnings at January 1, 2010, and again that amount is 0. Now there are two amounts each accounting period, whether it's a month or a quarter or even a semi-annual period of 6 months or a year. There are always two amounts that affect retained earnings for that period of time. One is the net income of the business, or it could be a net loss. If it's net income, it's going to be a plus amount added to retained earnings. If it's a net loss, then it's going to be a minus amount, or an amount that we subtract from our previous balance of retained earnings. So we have our net income or net loss that is generated by the business and actually shows up on our income statement. And the second amount are our dividends. Now, in any business, owners may from time to time avail themselves of assets that the business has at its disposal. Most of the time, these assets are in the form of cash, and they represent accumulated earnings of the business over time. That makes sense. For an owner, you're in business basically to make a profit, and from time to time you may be enjoying the benefits of your labor, so to speak, and you may be taking assets out of the business from time to time, generally in the form of cash. So in a corporation, these amounts are called dividends. Dividends are payouts of accumulated earnings to owners at specific times during the year for a corporation. It gets a little bit more complicated when you're a corporation. If you're a single proprietor, sole proprietor, an owner of a business that you own yourself, that makes you a sole proprietor, then at any point in time during the year, you may decide to take cash out of the business. And for a sole proprietorship, those amounts are referred to as drawings. Again, in a corporation, it's a little different. Corporation is a separate legal entity. Operating a corporation is a bit more complicated than operating a sole proprietorship or even a partnership. And so, and the terminology is different. Those amounts paid out to owners by a corporation, amounts of representing accumulated earnings, are called dividends. So again, retained earnings is affected by net income of the business and any dividends paid out of the business. And so the first item we're going to add to our beginning balance, which again is 0, since this is the first year of operation, would be, and I'm going to say add, net income. And our net income comes right off the income statement, $23,450. The other item that affects retained earnings, which is a deduction from any retained earnings balance, is the amount of dividends paid. And the amount of dividends shows up as a separate amount because it's in a separate account in our books. And that amount shown in the problem is $1,950. And that amount is subtracted. And so we start out the year with 0, since this is our first year. We have net income of $23,450, and we had total dividend for the year, and we had total dividends of $1,950 for the year. And so the difference there is going to be our retained earnings at $1231,010. And let me make sure I get this correct. $21,500. So again, our retained earnings balance at the end of the year is $21,500. We prepare our income statement first to calculate our net income, followed by our statement of retained earnings. To complete our statement of retained earnings, we need to have the amount of our net income for the time period. So our statement of retained earnings is always prepared after our income statement. Now our last financial statement is the balance sheet. I'm going to have to move to the next sheet.